All right, hello, Tyler Bryan here. Hope everything's going well. Episode today. What are we doing? Okay, following up on a theme that I've been very interested in. That is Y Combinator. Y Combinator. Interesting announcement. I don't even know of an announcement. It's more something that was confirmed. TechCrunch article came out, followed by a bunch of other articles, and so the information sort of verified that the summer cohort 2022 for Y Combinator was only 250 companies compared to the 414 companies that the previous cohort had been. So that's down 40%. That's a pretty big drop in the amount of companies in just one cohort, and there have been some sort of foreshadowing of this in a way, maybe not foreshadowing that the cohort was going to get smaller, but that we were heading into an interesting time in the world. Interesting is not a great word either. A dangerous, scary time, an economic downturn. And this is what YC, after this had been verified, said that first of all, YC said it's still relatively large compared to the last batches, which is true. It used to only do like 10, 12. There was an article, I was trying to see if I can pull it up here, from like 2012, where they talked about how they grew too fast and had 66 companies, and then they had 84, and how that was too much of a jump for them to handle. So now we look at 414 in one cohort, and we see, man, things have really changed. And there was an article, one that I actually, I didn't write the article, of course, but one that I sort of published a video on about Y Combinator's sort of letter to founders. And this was really interesting to me because they basically said, hey, it's time to prepare for the worst. This time is coming, and extend your runway, make sure you've got cash, not cut your losses, but cut expenses as much as you possibly can. And then I think that became a signal or an indicator for a lot of startups, but then so many people who are involved in this ecosystem to also follow that advice. And so this sort of was like a warning sign or a signal for many of the actions that then started to take place. And since that, I've got the video right here. We're not going to watch the video, but I'll pull it up just for reference and then
talk about recessions.
Links, as always, that the times are changing, as they would say. And so we obviously have been seeing that come to fruition. They had lots of signals in their own team working at Y Combinator. And you don't need to see a picture of my face, don't worry about that. They had seen that in probably the data coming back from the companies that they had invested in, and saying, hey, this is how it's going, or hey, we're losing contracts, or we're unable to fundraise, or our valuation is dropping, et cetera, et cetera. And so they had written this email, and here we go. We've got a link to it. Here's a couple of the notes. I'm not going to go in depth through it, but this then created a bunch of discussions. Some saying, you need to have 18 months of runway now. Other people saying you need to have 4. And really, one of the quotes that stuck out was plan for the worst, and no one can predict how bad the economy will get, but things do not look good. And I just think, with Y Combinator, with how plugged they are into the economy, into tech companies, into businesses that are high growth and driving innovation in the world, that it's worthwhile for us to take a time and think about, why are they saying this? What do they know that maybe we don't know fully? And what should we do because of this? And there are some changes that they said sort of around, that it's in-person programming, and that's the reason that they've made some of this shift here as well too. And batch sizes have changed, but this is definitely, 40% drop in anything is definitely worthwhile taking notice. They do also say that it has a disproportionate impact on international companies. And a couple other things that I think stuck out was there's been an ongoing discussion around the impact of bigger cohorts on the YC brand. With those tight, very exclusive cohorts in the beginning, some of the great companies that have come out of that, it was so refined, the amount of companies that got in, and then those were just cherry picked from greatness to then go on and became widely sought after, invested, and a much higher chance of growth and in some terms success. And as these, as these YC has sort of opened their reins and gates and let more companies in, that has changed a little bit, and people are more skeptical of the quality of companies. Just like anything you scale up, sometimes it's hard to maintain that same level of quality. And asking, do all those companies deserve to be there where they have been there in the past, and are they worth funding? I'm guessing with what we're seeing right now in the environment that we're in, that some of these companies that had been and gone through Y Combinator are now facing very difficult times and are not showing signals that they're going to be successful, and it's creating even more skepticism of the companies that they're vetting. Although I think, we have to realize that so many people are being impacted by this, and just because you've gone through YC doesn't mean you can withstand market crashes and economic environments like this. So I do think there is some caveats to maybe that perspective. But overall, I think people think a more personalized experience. If you've got 10 companies, 12 companies, I look at Cal Kanakis's 10 or 7 or 8 per cohort. That personal experience that then can be created there is really valuable, and then allows companies to connect more and, ideally, get more personalized experience that allows them to accelerate the way that they want. And YC has a massive team who is managing all these startups. I'm interested to understand, will we see layoffs? Will we see change in the size of YC's? The amount of people who are on the YC team. And the other thing to consider here is that YC, just like, companies are raising money, YC is raising money. Obviously, they've had some big payouts from some of the companies that have been successful, but overall, they're still raising money to invest in these companies, and maybe they're getting signals that's not going to be so easy anymore. And even with a brand as good as YC, they're having problems, and so then this has had the trickle down consequences of all this. And YC, since 2005, funded 3,000 startups, combined market valuation of over $600 billion. So they're extremely successful. And the other thing that this sits on the back of is this idea of the new standard check. And so previously that check had been $125,000. That $125,000 had been for 7% of the company. That had been standard for a long time. That puts you at like a 1.4 million USD valuation. And so one of the things that makes sense is that why would they not invest at you if they can invest in you at that valuation? A couple companies fail, a couple companies do okay, and then there's a couple ones that are big wins. They're going to reap a lot of rewards from that win when they're getting in at such a low valuation floor. Now they've moved to this $500,000 standard check, which is really $125,000, and then I believe a safe note that's uncapped based on the next round that you do. So basically $375,000 of that is invested at a later date if you agree upon that, and that would then obviously increase the amount of cost per company they invest in if they're accepting that. I'm guessing they would accept that. And then makes it maybe not available for them to invest as many companies. And I think someone did the math. Might have been Jason on Inside about like they had like only if they kept going at the pace of 415 companies per cohort, they only had like 2 years worth of investments, where now if they drop this down, it's like 7 years or something. So that's the environment that they are extending or trying to extend to. And again, another signal for us in this world that, maybe we need to be continuing to make adjustments. Other people have pushed back. People have said that what YC is saying is hyperbolic, that there is cynicism in there, that, those people who are pushing such innovation and greatness should, think that companies take 10 years to build, and that this, they shouldn't be so skeptical of the environment when these companies are in the early stage and have potential for huge growth along the path that a company like them would take. So I do think there's a lot of sort of, I don't want to say conflicting information from YC specifically, but just a lot of different perspectives, a lot of unknowns right now. And, YC, Y Combinator here is not falling victim to those unknowns too, but, taking a relatively bold stance on where they want to be just in case things go that worst case scenario like they may have, like they may think that it will. So my disclaimer at the end of this is that I love YC. I've admired them very much. I admire the companies that come out of it. I've applied for YC. I've had conversations with Michael Seibel from YC, almost gotten in, didn't get in. I don't think I'm holding that grudge, but I do, pay attention to these. And anytime I find that I can make a video about it, it's fun. So that's my disclaimer at the end. But overall, looking at this at a pretty unbiased lens, at least trying to, and just thinking, what does this mean? How does this impact me personally? Maybe it shouldn't, maybe it doesn't. But as we look around for signals in the world that we're in today, trying to predict how we should act, how should we adapt, how should we perform, what decisions we should be making, this one seems like a valuable one. And the rain is now coming down. That's a sign for me to shut this down. This has been Tyler Bryden talking about Y Combinator decreasing their cohort size by 40%, and a little bit of questions that surround that. I hope you enjoyed this video. I hope you got some insights. If you did, like, comment, subscribe, do the algorithm stuff. Thank you very much, and love you very much for checking this out. I appreciate everyone who does those things. Keeps me on the journey, keeps me creating content, and I'm thankful to continue to have that motivation and inspiration. Thank you so much. Have a good day. Bye-bye.